Today on Ag News Daily.
The Realtor Land Institute is a trusted survey, and they are saying that the market's down about 1% from 6 months ago. Now go back to 2020, we rose up about 40%. After we rose up that 40%, 24 kind of went down, and we were down about 5% across the Midwest. And then this last year, I've seen some strength coming back, actually.
Welcome back to the weekly edition of the Ag News Daily Podcast. Delaney is probably where she'd rather be, far, far away from me today as we record this.
That's true, Tanner. That's usually the case.
Welcome to November. Happy Turkey Month. Excited to get closer and closer to one of my favorite holidays. Is Thanksgiving your favorite holiday, Delaney?
It's not, but it's probably up there at the top because of all the good food you get to eat.
Well, hopefully this year, I enjoy the Thanksgivings that don't include snow. And hopefully this year we don't have snow. But I will tell you what, here in the Midwest, we are bracing for a series of a couple of fast-moving clipper systems that will pass through the next couple of days. One of those systems this weekend will pull in very cold air. That shot of cold air will drop temperatures for a short stretch of time. We also have precipitation that, with that cold air moving over the area, could produce snow, especially as it gets closer to the Great Lake region. It's expected to produce lake effect snow in some of those areas that they typically see this time of year. Winds are going to stay breezy with each system, and most of the areas outside of the Great Lakes will just see some limited precipitation. So that's good news. The overall conditions will remain favorable for farmers that are trying to finish up harvest and some of their fall field work. However, some very dry soil areas continue to be a concern across parts of the Midwest and into the Corn Belt. Agronomists are saying, Delaney, that it's important to monitor your soil moisture before the ground freezes for the winter, because that could have an impact on your planting conditions next spring. So we'll keep an eye on those systems and hopefully next week not report on very much snowfall this early in the year.
Well, due to the ongoing shutdown, there are just 3 crop progress reports remaining for 2025, with the final one scheduled for November 24th. So we may not have another crop report this year. In place of official data, a Reuters poll of 9 analysts estimates U.S. corn harvest progress is at about 83% as of November 2nd, compared to 91% last year, and a 5-year average of 75%. Soybean harvest was pegged at 91%, according to that poll, slightly behind last year's 94% average, but above the 5-year average of 85%. Winter wheat planting is estimated at 91%, according to the poll, and the USDA's National Agricultural Statistics Service plans to release several reports in November, including the monthly Crops and Supply Demand Report, or WASD. So we should see that published on November 14th, according to the agency's website, Tanner.
Well, hopefully we get to see that. We also saw a couple of updates in regards to the legality of tariffs. The U.S. Supreme Court is weighing in on that legality that's imposed a tariff on nearly every U.S. trading partner under President Donald Trump. Justices heard oral arguments Wednesday, and according to The Guardian, even conservative members of the court questioned the administration's justification for these duties. The White House used the 1977 International Emergency Economic Powers Act to impose these tariffs, including steep duties on imported steel. Lower courts have already ruled against the administration, prompting this appeal now to the nation's highest court. Meanwhile, the Senate voted 52-48 in the national emergency President Trump declared to reinforce a 50% tariff on Brazilian beef imports. 5 Republican senators joined the Democrats to support this resolution, which Politico reported is one of the 3 measures aimed at rolling back tariffs on Brazil, Canada, and other nations. The vote, however, was largely symbolic, as the House Republican leaders have delayed a vote on this issue now until March. The Supreme Court has granted an expedited appeal, a decision that could still take months, but the administration has said it plans to use tariff revenue to fund farm relief payments. But Rusty Rumley, senior staff attorney for the National Agricultural Law Center, told Brownfield that it's now unclear that the ruling could affect the timing of this assistance. He added President Trump's first term, the USDA used Commodity Credit Corporation to disperse these payments, but that funding is currently running low. AgWeb then reported that the USDA Deputy Secretary Stephen Vaden recently confirmed that the aid will not be distributed until after this government shutdown ends. So a lot of uncertainty in those updates, Delaney.
A lot of uncertainty around air travel as well. So fingers crossed I make it home this next week. But continuing on here with some tariff news, the U.S. Department of Agriculture has come under scrutiny after transferring $13 billion from the Commodity Credit Corporation into a farmers support program, funds which will fund some key programs. This was a move that was made without notifying Congress, which is why it has caused such a taboo. The CCC traditionally funds key programs like conservation payments, dairy margin coverage, and price supports, but the government executive reports that announced that transfer has left some of those programs facing shortfalls. About $3 billion of the money was later pulled back to help reopen USDA offices and resume essential services during the government shutdown. However, roughly $10 billion remains unused under the Office of the Secretary, awaiting activation of the new tariff relief program. Senator Patty Murray of Washington, a senior member of the Senate Appropriations Committee, criticized the move, saying it undermines vital farm programs and concentrates financial control within the USDA without proper congressional oversight.
We've got plenty of updates this week, which is great. The U.S. Labor Department has confirmed that the Office of Foreign Labor Certification will resume processing H-2A temporary ag labor applications, despite the government being shut down. The decision comes after Western Growers Association sent a letter to the White House urging immediate action, citing major disruptions that the producers rely on these seasonal workers for. Western growers representatives met with senior administration officials last week to discuss the impact that the shutdown is having on providing data and estimation of farm losses tied to the delay of H-2A approvals. That information was key to the administration's decision to restart this program. According to page 18 of the Labor Department's updated shutdown contingency plan, the agency will begin processing prevailing wage determinations and labor certification applications as soon as next week. So good news there.
Well, a new coalition at a national level here is called Grow It Here, which has launched a new campaign spotlighting America's growing farm labor shortage and calls for long-term workforce reform. The coalition says the current labor system isn't sustainable, with many farmers struggling to stay in business. Christy Boswell, the advisor to the Grow It Here campaign and a former USDA and White House agricultural advisor, says the Department of Labor needs to lead major reforms to make sure programs like H-2A are more workable. Research from Michigan State University shows that half of all U.S. farmers can't hire the workers they need, leaving an average 20% labor gap on farms. USDA data shows that nearly 70% of all crop workers between 2020 and 2022 were foreign-born, and the number of H-2A visa workers was increased more than sevenfold since 2005. Grow It Here represents farmers and livestock and dairy and fruits and vegetables, the entire gamut of the industry, and plans to host listening sessions nationwide to push for a more reliable long-term agricultural workforce. And Tanner, that is not a battle I would want to fight. That is a long and tenuous process. We have had labor issues here in the United States.
Speaking of long and tenuous, the relationship between U.S. and Chinese leaders is just that. But after last week's meeting between them, China has confirmed it will suspend retaliatory tariffs on several American imports, including farm goods. But U.S. soybeans will still be facing a 13% tariff. Reuters reports China's State Council will remove duties of up to 15% on some ag products starting in November, on November 10th. However, 10% tariffs imposed earlier in response to the U.S. Liberation Day, duties will remain in place. Traders say that even with the reductions, U.S. soybeans still remain more expensive than Brazilian shipments, which will continue to dominate their global demand. As part of a broader deal reached, though, between President Trump and Chinese President Xi Jinping, China has agreed to suspend all retaliatory tariffs announced since early March of this year. The suspension covers U.S. exports such as chicken, beef, pork, dairy, corn, wheat, cotton, sorghum, fruits, and vegetables. They've also committed to purchasing 12 million metric tons of U.S. soybeans by the end of this year, 25 million metric tons annually from 26 through 28, volumes that were similar to pre-trade war levels. In exchange, USDA will extend certain Section 301 tariff exclusions through November of 2026. A little progress to land.
Well, it might be some of the trade deals we've gotten, but farmer sentiment improved slightly in October, according to the CME Purdue University Economy Barometer. So let's find out why. The index rose 30 points from September to a reading of 129, driven mainly by stronger views on current conditions. The index of the current conditions climbed 8 points to 130, while future expectations were mostly unchanged at 129. The data shows a divide, of course, between livestock and crop producers. Livestock farmers remaining more upbeat thanks to stronger beef profits, while crop producers report tighter margins and a more pessimistic outlook. The Farm Financial Performance Index fell sharply to 78 in October, down 10 points from September, and more than 30 points below May's level. Crop producers expect profits to fall well below last year, while livestock producers anticipate steady financial performance. Despite weaker overall financial expectations, the Farm Capital Investment Index rose 9 points to 62, fueled by, again, optimism in the livestock sector. When asked how they would use potential USDA aid payments, over half of the farmers said they would pay down debt, while a quarter said they would strengthen their working capital. Uncertainty continues here, as 58% of farmers said tariffs would strengthen the economy, which was down from 70% earlier this year, but twice as many producers in the spring remain unsure about their long-term impact.
Yeah, hopefully more certainty comes for growers before the 26 crop gets put into the ground. We did see the overall Rural Mainstreet Index fell below growth neutral for the 8th time this year. It dropped to 34.6 in October, its lowest level since May of 2020. The survey conducted amongst bank CEOs in rural areas across 10 Midwestern states reflects the ongoing challenges in agriculture. Creighton University economist Ernie Goss said weak commodity prices for grain producers continue to dampen that economic activity within this region. Other indicators point to persistent stress on the rural economy. Farmland prices fell below growth neutral for the 17th time in 18 months, while farm loan delinquency rates rose 1.6%, up from 1.1 in June. The Farm Equipment Sales Index improved slightly from 18.8 to 15, improved slightly to 18.8, up from 15.2. That's now remained below growth neutral for 26 consecutive months. But despite the challenges, 72% of bank CEOs say they believe Donald Trump's approach to China is about right, even as tariffs contributed to this broader economic volatility.
Well, this is certainly a time when a lot are thinking about maybe health and wellness, and the American Farm Bureau is no exception. They've announced that they're expanding their Farm State of Mind initiative by partnering with the Farm Family Wellness Alliance to launch the Farm State of Mind Alliance. AFBF President Zippy Duvall says the move comes at a critical time for rural mental health, with farmers and ranchers facing economic uncertainty. He says, like, quote, they haven't seen in a generation. Duvall says the Farm State of Mind resources have already made a difference for many, and the new alliance aims to broaden that support by bringing more organizations into the effort. National Farmers Union President Rob LaRue, whose group is part of the alliance, emphasizes the importance of the message. That, he says, quote, no one should have to carry the burden alone. Existing resources do remain available at fsomalliance.org.
Well, we're seeing an interesting headline come out. It's called the Motorcade for Trade, a 2,500-mile, 18-state tour across America's heartland, concluded this week in Washington, D.C. It was organized by Farmers for Free Trade. The tour ran from early September through early November of 2025, covered 11 states and over 8,000 miles. This marked the second campaign of its kind, being built off of the 2019 tour that supported the USMCA passage with 47 stops nationwide. Farmers consistently shared their concerns about the economic pressures, including trade volatility, rising input costs, and limited market access, emphasizing how critical international trade is to the viability of family farming operations. With about $170.5 billion in annual agricultural exports, supported more than 1 million full-time American jobs, trade policy has directly affected the livelihoods of farmers. Top export markets include Mexico, Canada, and China, are particularly important as they learned about on this tour, but input tariffs and retaliatory trade measures could create that double squeeze effect, raising production costs while reducing export revenue. Throughout the tour, farmers voiced very strong support for maintaining and strengthening ties between Canada and Mexico and highlighted the importance of the 26th joint review of that USMCA. They hope that it would offer a chance to address the concerns and ensure the agreement continues to benefit American agriculture. Farmers also expressed frustration over abrupt shifts in the trade policy. Investments in land, facilities, and multi-year production plans are based on a stable market, but sudden policy changes and tariffs along with long-standing trade partners will undermine the certainty that is necessary for making some of those decisions. This motorcade for trade reinforced a consistent, predictable trade agreement, making it essential for the future of U.S. ag and the stability of rural ag communities. So, interesting there, some boots on the ground results during that trip, Delaney.
All I keep thinking is, who gets to name all of these different programs and acronyms?
I'm glad it's not me.
They do a good job. Some of them maybe are a little wordy, but they're very catchy for the most part. Switching notes here, U.S. ethanol production reached a record high last week, according to the Energy Information Administration. Production averaged 1.123 million barrels per day, up 32,000 from the week prior, and 18,000 barrels higher than a year ago. The increase comes as ethanol producers work to meet current and anticipated demand, with more corn becoming available as harvest winds down in key growing areas. Stocks of ethanol rose to 22.655 million barrels, up 288,000 barrels from the week prior, and 635,000 higher from last year. Iowa State University's Center for Agricultural and Rural Development says estimated operating margins for the average Iowa plant have declined slightly, but remain positive and above year-ago levels. Despite higher production, net ethanol inputs purchased by refiners and blenders and gasoline supplied to the market were slightly lower, according to the Renewable Fuels Association. U.S. ethanol exports averaged 107,000 barrels per day, down 68,000 barrels from the previous week and roughly flat compared to a year ago. The USDA said they will provide updated corn for ethanol projections in their November 14th FODST report. So we should see some updated data there.
The National Wheat Foundation announced its winners of the 2025 National Wheat Yield Contest at its fall meeting earlier this week. This is marking the contest's 10th anniversary. This year's competition drew 465 entries, including 30 in digital yield categories. Record high yields were reported in winter dry land and spring irrigated land, with 17 repeat winners and 11 first-time winners. Delaney? The contest also evaluates wheat quality, with soft wheat tested in Portland, Oregon, hard wheat tested in Kansas City. The director, Ian Osborne, says that it demonstrates high-yield growers can also produce top-quality wheat, while Chairman Gary Broyles highlighted winners from both traditional and new wheat states. The Quality Award winners will be announced in mid-January of 2026. So excited to be able to report on those as well.
Well, one thing we continue to report on are land value prices. I'm excited for today's interview, Tanner. It's one of your, I'm going to say, BFFs. We caught up with David Whitaker to talk about current land values and what's driving that farmland market. So let's jump into that conversation now.
Well, folks, we're having a very familiar voice and face onto the podcast this week with David Whitaker, also one of the co-hosts for Farm for Profit and the land auction guy. He is the guy if you need answers on what's going on in the land community. David, thanks for joining today.
Glad to be here. Thanks for having me.
So I know you have a pretty heavy emphasis on Iowa farmland, but we've been reporting here with the last few months about just softening farmland values in general. Give us the 10,000 foot overview of where things sit from your perspective.
So just to start off with a fact, $10,915 is your average price per acre across the Midwest. That's me cataloging a sales count of about 63,000 sales across the Midwest. So the Realtor Land Institute is a trusted survey, and they are saying that the market's down about 1% from 6 months ago. Now go back to 2020, we rose up about 40%. After we rose up that 40%, 24 kind of went down, and we were down about 5% across the Midwest. And then this last year, I've seen some strength coming back, actually. So the markets are emotion, but it's getting, it seems to be strong right now.
And so walk us through a little bit about some of the farmland sales that you've been seeing here as of late. Are we seeing trends of continued strength? Are we seeing some prices softening? Walk us through. I know you've got new sales, it seems like almost every day.
Sure. The blanket statement, Delaney, is good stuff sells good, medium stuff sells medium, and bad stuff sells bad. So the better the quality of ground. So I always say square, flat, and black is like tall, dark, and handsome. If it's easy for the farmer to go in and operate, those prices are staying really strong. So in Iowa, we have a productivity index, or a CSR score. The better the score, the better the price. So to your question, there was a sale just today in Northwest Iowa, over $20,000 an acre, which everywhere else on the news, we're hearing farm crisis, farm crisis, farm crisis. But there is still a lot of strength in the farmland market. It's a solid asset. I sold a couple last week in eastern Iowa that averaged $16,000 an acre. Those were all really good farms. Back up about a month and a half ago, I had a medium quality to low quality farm. So 100's the best score in Iowa, and I had some 60s. So medium to lower quality. And it was tougher at the auction. We actually did not get it sold at the auction. And we were asking for about $7,500 an acre. So we got two extremes. The really, really good stuff, still a high demand and high prices, and we're setting records at 20+ thousand an acre. That medium stuff is where I think the advantage is, where there could be a market where you might get a deal and it might go strong. That really is neighbor dependent. And then some of the lower quality stuff, you get into the timber ground, the hunting, and the lower quality, it seems to be just staying steady with an average of at about $5,800 an acre. So a little snapshot.
That's great. I think that gives a really good perspective. The other thing you were mentioning there is the farm in Northwest Iowa selling for 20,000 plus an acre. I just think, how are they funding that large of a sale? Are you seeing any trends as far as, are these cash sales? Are they leveraging existing pieces of ground? What kind of trends are you seeing there?
Sure. So I'm still about 80% of the buyer base right now, Delaney, is the neighbor farmer. Okay. 20% is an investor with air quotes on it. So what's an investor? Is an investor a 10,000 acre farmer in Iowa that is, 4 or 5 families together? Yes, that's an investor. Is an investor someone from Baltimore who called me last week that has 38 million and would like to invest it in farmland? Yes. They normally have margins though, and their margin is about 2.5%. So they want to at least make 2.5%. They want to make 5%, but 2.5% is what most people strive to make on farmland with cash rent. Now we know commodity prices are are lower, and we know that inputs are higher. So our margin as farmers is less. So can we pay as much cash rent? No. So that means that those buyers that are the investors, we'll talk about the 20% for just a second, they have a limit, and their limit is only so much. So the trend that I've seen is actually the neighbor farmers outbidding them. So that's who's kind of buying. How are they affording it? The only thing I can put to it is a couple of things. Dollar cost averaging. So if you bought land, we'll use Farmer Bob. Farmer Bob in Western Iowa bought land back in 1980s. He paid $500 an acre, and he currently owns about 1,000 acres. He wants to expand. And even though interest rates are high and prices are high and commodity prices are low, how can he afford it? How can he pencil it? Well, take that $500 an acre that was paid off now for the past 20 years. There is old money. So Iowa State tells us 82% of farms are paid for free and clear, Delaney. This is Iowa specific. But if there's all that old money out there, no matter whether it's Kansas or Nebraska or Iowa, They bought those farms, and there's just wealth that was paid for long ago. And so now we dollar cost average. So we buy a farm that's twice as much as it should be, $20,000 an acre, should have been 10. And we're paying double that. Well, when they do the math on what did it cost to pencil this throughout the year, they're averaging that over the other 1,000 acres. Well, on this acres, we just pay taxes. On these acres, we just pay taxes. And on a handful we get from grandma, we still rent from grandma at a really low cash rent. So when we average them all out, it still is actually cheaper than cash rent would be. That's the way it works. The other thing is so older money that's been there. Okay. The cattle market's been strong. And where this sale was in particular is Northwest Iowa. Big cattle contingent up there in Northwest Iowa. So they might have some money from different assets that they can bring to the table. So that's kind of what I'm seeing. There's money coming from somewhere, either other assets, investors, or it's just old money that's been there and they're dollar cost averaging it.
I'm curious to know if you're seeing any other maybe trends on age, geography, or even the method to sell. Are they going auction? Are they going private bid? What other trends might you be seeing?
Sure. I'll get to the auction style here in just a second. The trend that I'm seeing is a lot of people who are sellers are the kids of a third generation removed farmer. So they live in wherever, Missouri, New York, Florida, and they inherit this land and they're like, well, we don't farm. So what are we going to do with it? They're going to do two things. They're either going to manage it and have somebody manage it or keep going with current tenant, or they're going to sell it. Oftentimes, if the parents left to 3 kids, so baby boomer generation, so we're talking generational, they had 4 or 5 kids. If they had 4 or 5 kids, now they inherit it. What are they going to do with it? One brother or sister always wants to sell, and they tend to ask the other brothers and sisters, hey, can we sell? We should sell. So that's who's selling. So that's a trend I see is as that demographic ages out, we have non-participating farmers. So what do? They're going to sell or they're going to cash rent it out. Okay. Now, how are they going to get that done? To your question about how are we seeing it done? Let me back up 1 second. The buyers. So that's the sellers. The buyers, generationally, I see a lot of guys that I've called that are 75, so paid off, should have wealth, etc. And they're like, Dave, I just don't want to go any more in debt in these times. So where I had buyers 75 plus, I don't anymore. So now I think the trend that I'm seeing is that 45 age demographic on up to 75 is really my buyer set. Past that, they're like, I don't want to go another million in debt. I'm 75. I'm out. So that's the age demographic. I'm seeing younger people trying to buy, but of course, younger than that wants to buy. So the 20s and the 30s really want to buy, but they don't have the money. So now how are we selling it? To the second part of your question. I did some numbers before I hopped on the call here, and I did last year compared to this year and amount of sales. Last year total, so this is the whole year, we had, hold on 1 second here, we had 957 sales total. That was the whole year. Now we still have 3 months left out of this year. We've only done 553 auctions. So that's just auction data. So of those auction data, I went online and looked at my database. So far in Iowa specifically, there's been 4,000 sales, 3,927. So 14% of all the ground that is sold this year so far sold by auction. So 14% sold by auction. So that could be a sealed bid. That could be a live outcry sale, a simulcast, meaning internet's included, an online countdown, internet auction, or it could be a timed sale. Here's what I'm seeing. Good stuff sells good. Good stuff should go to auction because we have competitive bidding. Auctions work with competitive bidding. I've seen a whole lot more sealed bids. So what is a sealed bid? Sealed bid is, hey, Delaney, by 8 o'clock on Tuesday, give me your highest and best offer, period. And so that helps the sellers. How? Well, different than a listing, it forces buyers to be decisive. Tuesday at 8 o'clock is when we're done. If they were on the fence, they got to crap or get off the pot, if you will. Okay. It also still breeds competition. So there's still an auction aspect to it. Well, what is the neighbor Bob going to give for this? I just don't know. Well, doggone it. So now who am I bidding against? I'm bidding against myself. I don't know if anybody bid. I can't see the other people bid. So now it's just truly, what are you willing to give, Dave? How much is this farm worth to you? So where this works and why we're seeing more of it is if we went to a traditional live auction today, which is what I like the outcry, talk fast. I can look at Delaney to my left and say, she just bid 13,000. Sure. I'll give the next bid. The auctioneer might ask for 500 more, 13,500. Okay. And she can look at me and see me and outbid me. Well, currently, I think most people with cash are the buyers. Who's the backup bidder? The backup bidder is actually the guy that might need the financing. If they need the financing and interest rates went from 2.9% on farmland up to 6.5%, guess what? The bank won't let me spend as much. So what happened to my backup bidder? Their price went to where they were going to give 13.5. Now all of a sudden they're down to 10.5. Okay. If you're the cash buyer, how much do you have to bid? At a live auction, one bid higher than the underbidder. So if the underbidder is a guy that's financed, well, his price just went down $3,000 an acre. Okay. So now you, as the cash buyer, might have been willing to give 13,000, but you weren't pushed there. And by push, you need to have another bidder, right? So you're one bid higher than whatever the unchallenged bidder is. Okay. So you'd have bought that for $100 more an acre than he did. So 10.5, you get it for 10.6. Whereas if we said sealed bid, take this type of sale, tell you what, give me your highest and best by Friday at 8:00. Well, now you're like, well, what'd the other guy give? Well, I don't know. We don't know what the other guy gave. How much are you willing to give? You're going to see more of that on the mediocre ground. Good stuff where there's competition, it always sells good. But on the mediocre and lower end ground, you're going to see more sealed bid and just list it. If you know the price you want, you list it. If you want to see what somebody's willing to give, you take it to auction.
That's really interesting to walk us through some of the psychology behind the sealed bid, because I've definitely seen a lot more of that type of ground coming up for sale with the sealed bid as the option. So I appreciate peeking behind the curtain a little bit. So now maybe some of our listeners can understand some of that psychology as well. I think the final question I have for you is succession, right? You mentioned already baby boomers, they're retiring, they're passing away, etc. Their kids are taking over. But we know that the average age of the farmer is 59, 60 years old, maybe higher in some states. How do you see succession planning and the amount of farmland available playing out here over the next 5 to 10 years?
There is going to be a whole lot of farmland moving somewhere. Of course, we had the largest demographic that is now getting older and older, and they're going to transition to the next generation. As they do, I heard a statistic the other day, and I don't quote me on this, but it was like only 18% of people have a succession plan. Okay, so if only 18% of those hundreds of thousands of acres that are going to move have a plan, what happens to it? Most of it, now a plan can be as easy as a will or a trust, or, as we get to some of these bigger numbers, they'll have sunsets and LLCs and S Corps. And, those are the people we think have the succession plan because they farm 10,000 acres and there's a lot of money moving. But even the smallest people with 100 acres, I think should have a plan, because those 100 acres really add up anymore, more than they did in an era before. In the 80s, it was worth, $60,000. Now we're meeting limits that are 1.5, 5 million, 6 million, with just your average estate. So I think more people should do succession plan, but that's a hard conversation to have. And so if that statistic is right, and I don't remember where I heard it, but 18% of the people out there have that, we got a lot of, well, what are they going to do? What are they going to do? So we have a lot of young farmers that would really like to figure out what they're going to do. My best advice for that, I actually did a poll on social media. When should we talk to the family if we want to buy that ground or farm it? It should happen when they're alive. Okay, so we should get in there and say, I just want you to know I express interest, that I sure would like to be in front of this. So it's not the first time at the funeral that you're hearing that I would like to buy it, or I would like to farm it, or something like that. So I challenge all your listeners and anybody, any age demographic, to get in front of it. If you haven't had that conversation, go have that conversation, even if it's just a I'm interested someday. I'm not saying, I want to kick you out now or anything. Someday I'd really be interested. I think that's the conversation that we need to have.
Awesome. Well, David, before I let you go, I know you're really active on social media. If people want to continue following along with you for tips and tricks, what's the best place to go to find you?
Sure. Facebook, it's just my name, David Whitaker. All other platforms, it's Farmland Guy on TikTok, Insta, et cetera, et cetera. But yeah, love to connect.
I'm glad you're able to chat with Dave. Certainly a busy guy out on the hunt right now as far as that goes. So we wish him the best and thank him for providing his input there. Global nitrogen markets remain tight. India's recent urea tender fell short, buying only 430,000 tons of a 2 million ton target. And traders will expect another tender soon. Europe's smaller purchases are keeping prices elevated, while North American inventories are limited due to production downtime. We're seeing ammonia demand strong for fall corn applications, and tight UAN and urea supplies could support prices if the farm gate demand starts to pick up. China's earlier strong exports added some supply, but uncertainty about future shipments will keep these markets on edge. For phosphate, China's export window closes on October 15th with no extension, cutting global supply. Normally a major exporter, China is now expected to ship less than 4.5 million tons this year. This is going to keep prices high. Here in North America, tight supplies and strong crop yields are driving farmers to reapply phosphate to protect their 26 yield potential. Market watchers warn that even a small increase in demand could push these prices much higher. So buyers are advised not to wait. But what do we see on the commodity side, Delaney?
Well, maybe one quick note there. Josh Linville will be at National Association of Farm Broadcasting's annual convention here in a couple weeks. So we're going to catch up with him, I hope, in person to get some fertilizer market updates. But in the larger commodity markets, the heaviest losses this week were in the soy complex, with both soybeans and soy meal under some significant pressure. Meal futures were overbought and due for some correction, and given the absence of continued Chinese soybean purchases after last week's big announcement and purchase, the entire complex has corrected. Fresh news remains limited, and this is putting more emphasis on some technical trading this week. We're also seeing an early positioning for next week's WASDE report, since we have not had one in almost 2 months now. Corn values have hit their highest level since July, and finally Brazil's 25-26 ethanol production is up for the year according to some recent data. But we'll get that WASDE report here within the next week. And markets are still certainly chewing on local news for basis, and some of those things. Basis is still continuing to remain strong in a lot of areas, Tanner. But that's what we know today. What's going on in the markets.
That's right. Well, I know farmers are busy, so thanks for tuning in to us this week. Hopefully we don't freeze up tight here in the Midwest so we can finish our fall tillage across most of the area. Always excited to be able to provide you guys with updates. We appreciate you tuning in to us. You can always find us on social media and YouTube. Make sure if you've got ideas for us, you share those in those comment sections. But Delaney, for today, what do you say? Should we let them go?
Let's let them go.